Have you ever wondered if living entirely off of dividends is truly possible? It's a dream many people share, replacing your job income with a steady stream of money from investments. The good news? It's absolutely achievable, and you don't need millions of dollars to make it happen. In this video, I'll show you exactly how much you need to live off dividends, break down key strategies to reach your goals, and explore different investment options that require less capital than you might think. By the end, you'll have a clear, actionable plan to make passive income a reality. Don't forget to like this video and subscribe to join us on this financial freedom journey. Dividend investing stands out as one of the simplest ways to generate passive income. Unlike rental properties that require ongoing maintenance or digital businesses that demand years of effort to build, dividends offer a hands-off approach to wealth creation. When you invest in dividend-paying stocks, you're essentially earning money just for owning a piece of a company. These companies pay you regularly, quarterly, or even monthly, without you needing to lift a finger. It's like getting a paycheck without the work. The simplicity is what makes dividend investing so attractive. You don't need to worry about tenants, customers, or complex systems. Your only job is to invest wisely, and the dividends will roll in consistently. Let's get to the heart of the matter. How much money do you actually need to live off dividends? The answer depends on three key factors: your living expenses, the dividend yield of your investments, and how much risk you're willing to take. For example, the average person in the US spends about $4,000 per month or $48,000 per year. If you aim to replace that amount with dividend income, you'll need to calculate your required investment based on the yield. A 4% dividend yield means you'll need $1.2 million invested to generate $48,000 annually. However, this number isn't set in stone. If you find investments with a higher yield, such as 6%, you'd only need $800,000. Conversely, lower yields of 2% would require $2.4 million. The key is finding a balance between yield, stability, and your risk tolerance. It's tempting to chase the highest yields you can find, but there's a trade-off. High-yield stocks often come with higher risks. For instance, a stock offering a 10% yield might be struggling financially, making those dividends unsustainable. Instead, look for companies that offer a balance of decent yield and reliability. Stocks with yields between 3% and 6% are often safer and still provide enough income to meet your needs. These are typically companies in sectors like utilities, healthcare, or consumer goods. For example, a 5% yield on a $1 million portfolio generates $50,000 annually. That's enough to cover the average person's living expenses without taking on excessive risk. Stability is key when you're relying on dividends as your primary income. Let's look at a specific example. Federal Agricultural Mortgage Corporation, AGM. This company, known as Farmer Mac, offers a dividend yield of about 2.85%. While not the highest yield, it's backed by a stable business model in the agricultural finance sector. To generate $48,000 annually with AGM's 2.85% yield, you'll need approximately $1.7 million invested. That's a significant amount, but AGM's consistent dividend growth and capital appreciation potential make it a reliable cornerstone for a dividend portfolio. However, relying solely on AGM or similar low-yield stocks might take longer to achieve your goals. Diversifying with higher yield options can help you reach your income target more quickly. If you're looking for higher yields, real estate investment trusts, REITs, are an excellent option. By law, REITs are required to pay out at least 90% of their taxable income as dividends, making them ideal for income-focused investors. For example, Crown Castle, CCI, a REIT in the telecommunications sector, offers a yield of around 5.94%. At this rate, you'd need about $810,000 to generate $48,000 annually. That's significantly less than the $1.7 million required for lower yield stocks like AGM. REITs come with their own risks, such as market downturns in the real estate sector. However, their higher yields and steady payouts make them a valuable addition to a dividend-focused portfolio. Diversification is one of the golden rules of investing, especially when your goal is to live off dividends. Relying on a single company or sector is risky. If that company cuts its dividend, or the sector experiences a downturn, your income could take a big hit. Spreading your investments across multiple sectors, industries, and asset classes reduces risk and increases stability. For instance, you might combine consumer staples, technology stocks, REITs, and international funds to create a well-rounded portfolio. Diversification also ensures that your income remains consistent even if one part of the market faces challenges. It's like having multiple income streams working together to protect your financial future. If you want to maximize your dividend income without a massive investment, consider covered call ETFs. These funds generate additional income by selling call options on the stocks they hold, resulting in much higher yields than traditional dividend stocks. For example, QYLD, a popular covered call ETF, offers a yield of approximately 11.49%. At this rate, you'd need just $418,000 to generate $48,000 annually. That's less than half the amount required for lower yield options. However, covered call ETFs come with their own risks, such as limited upside potential and underperformance during volatile markets. They're best suited for investors who prioritize income over capital appreciation. Ultimately, living off dividends is about finding the right balance between yield, stability, and growth. You don't need to put all your money into high-yield stocks or take unnecessary risks. A mix of reliable dividend payers, REITs, and higher yield options can help you achieve your goals more efficiently. For example, you might allocate 50% of your portfolio to stable dividend stocks, 30% to REITs, and 20% to covered call ETFs. This diversified approach provides steady income while still allowing for growth and flexibility. One of the best strategies to accelerate your journey to living off dividends is reinvesting your payouts. Instead of spending your dividends, use them to buy more shares. This creates a compounding effect that grows your portfolio faster. For instance, if you reinvest $5,000 in annual dividends into a portfolio earning a 5% yield, those reinvestments will generate an additional $250 in dividends the following year. Over time, this cycle leads to exponential growth. Reinvesting dividends is like planting seeds from your harvest to grow an even bigger crop next season. The longer you stick with this strategy, the more powerful the results become. Living off dividends isn't just for the wealthy. It's achievable for anyone with a solid plan and the right strategy. Whether you're starting with $10,000 or $1 million, the key is to invest consistently, diversify wisely, and let time and compounding work their magic. If you found this video helpful, don't forget to like, subscribe, and share it with others who are on the path to financial freedom. Let's make dividend income work for you.